Since the economic reopening gained momentum in China in 2023, investors have been asking about stocks that could benefit from that trend. Alibaba and JD.com are two such stocks that are in a great position to thrive as the Chinese economy reopens. So in this video, I'll compare the two stocks and answer which one is the better buy right now. So let's begin by comparing revenue growth. And interestingly, looking at revenue growth of these two companies, they're very similar in the trend lines, right? You look at the direction, they're very close, with Alibaba having better revenue growth in the early years, 2019, 2020, 2021, and JD.com getting better revenue growth in 2022 and early 2023. Although in the most recent quarter, each of them having revenue decreases of over 5%. So in this metric, I would compare them as a tie. The next metric I wanted to look at is the operating profit margin over the trailing 12 months. And looking at this financial metric, Alibaba has a clear and distinct advantage over JD.com with an operating profit margin well ahead of JD, and in the most recent update, 11.83% compared to 2.34% for JD. So a clear advantage for Alibaba stock in this metric. The next metric I wanted to compare the two stocks on is cash flow from operations to sales. This measures how good the companies are at turning sales into cash flow. And in this metric, again, Alibaba showing a clear advantage with a trailing 12-month cash flow from operations of 23% compared to 3.92% for JD.com. This is despite Alibaba experiencing a decreasing trend of this metric, but then stabilizing it and turning around in the recent year and a half or so. Another metric here where Alibaba has the clear advantage. So out of the three metrics we've looked at so far, Alibaba has a clear advantage in two of them with a tie in the third one. Now, the final thing I'm going to look at is valuation. To use this metric, I chose the forward price to earnings ratio, and comparing these two stocks on the forward price to earnings, we see a very similar valuation. Alibaba trading at a forward price to earnings of 8.558 and JD.com stock trading at a forward price to earnings of 9.268. So given that Alibaba was better than JD on 2 out of the 3 metrics and a tie on the third one, and the valuation is very, very close, right? They're trading almost equally in terms of valuation. In fact, Alibaba is trading at a discount to JD.com, despite the fact that, in my opinion, its financial performance is better than JD.com. So to answer the question, which one of these two stocks that I think is a better buy right now is Alibaba stock. I think Alibaba stock is the better stock to buy here. Now remember, investing in stocks from China comes with an added degree of geopolitical risk. The government in China is not as friendly to business as the government in the US, so you have to account for that in your decision-making process. Regardless, each of these two stocks is exposed to a similar amount of that geopolitical risk. So that's all I've got for this video. Alibaba is my choice for best stock to buy between these two. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.